Sometimes if you invest in individual stocks instead of an index, you can sort of find a theme to invest in. So a sector that's out of favor like energy or shipping. And today I'm going to talk about guns and defense where I have some stuff invested. And these are just my thoughts. It's not a recommendation to buy or sell. Do your own due diligence. I'm just walking through my process. So I had bought before shares of Smith& Wesson, which I posted about, and you can see on the previous videos I had bought around 10 or $11 and sold at like 16 or 17. So that was a pretty good return in a year. And then after I sold out completely, it dropped down to around 10 and change, and I started adding, and now it's at 7. So I'm not working right now. I'm just interviewing and stuff like that. So I didn't have a lot of free cash laying around, but I did pick up some shares of this below 10, below 8, and I actually sold some puts to raise some money. And what happens when you sell a put is, for instance, I sold some puts at $8 that expire in 2027. So if you do that, and I'm not saying that you should, I'm saying this is what I did, uh, you could see that at $8, I think I got like $1.60. So if it goes below $8, and it's pretty close now, it's 7 and change, in the next 2 years, somebody can say, for that put that I sold, they have the right to give me their shares that they own at $8. That's fine. Why? Because I got $1.60, so minus 8. If it goes 640 and above, I still make money. If it goes below 640, I lose money. But if this traded below 640, that would be a great entry price. If I'm buying it at 8, I'm buying it at 9, I'm buying it at 10, and I have the opportunity to buy at 640. And the company is the entire gun industry is doing poorly right now compared to their highs, but they're still making money. And if you look at the market cap plus the debt, you got 441 million. They spent within the last year 120 million on their new warehouse, which should make them more efficient and lower their costs. So if you back that 120 out of the 440, you've got a pretty good price for the rest of the company, right? So um, so let's assume the new warehouse and factory is worth exactly 120 million because that's what they paid for it. You're getting the rest of the company for 320 million, which is, the intellectual property, all the patent and everything like that. And with companies like this and Ruger that have money to do research and development, they can be very profitable because generally about 25% of the profits come from, or sales, I should say, come from new models. And on Smith & Wesson last conference call, I believe it was like closer to 35. And so there are a lot of smaller companies that sell knockoffs of Glocks and 1911s and AR-15s because those are old models and they're not patented, and they're all competing on price. But companies like this that have the money for R&D, they can sell patented guns that they can charge more money for. And there's operating leverage involved in this. So a company that sells a lot of a gun will make more money than a company that sells a little of a gun, sort of percentage wise, because if you ever see a drug company that makes pill, the first pill is $100 million and the second one costs 25 cents. So if you can sell a lot of pills and spread that 100 million over the cost, that each additional one is very profitable. And the same thing with guns, same thing with cars. So I feel like this is a pretty good company. They still have debt, and they are not kind of focused on paying down debt as much as buying back shares and maintaining the dividend, which is good because it pays a nice dividend here, 6.5%. So I moved some money over to Robinhood, and I believe the interest they're charging me on margin is 6%. So if I buy shares of this, I can sort of, the dividend cancels out the margin I'm paying, and then I get the upside and appreciation. I also started looking at Ruger, which is in the same position. So Ruger is not as prestigious, let's say a brand as Smith and Wesson, they're known for uh, a little less pricey but durable guns. So it's sort of like the Toyota Corollas of the gun industry. But what I do like about it, the dividend isn't great, but they have no debt whatsoever. And as Peter Lynch said, it's pretty hard for you to go bankrupt if you don't owe anyone any money. They have no debt and they have a ton of cash on the balance sheet. So if you look at the debt, I won't say no debt, okay, 1.5 million debt, but they've got 173 million in cash, which works out to almost $10 a share. So you're paying $33 a share, but really it's about $23 a share because $10 of that almost is cash. And so if the gun industry recovers, um, this could do really well. And what I like about this, they just got a new CEO in, and generally, when you get a new CEO, the numbers look terrible in the beginning and they look better in the end. And I don't want to call it sandbagging, but they tend to have a lot of write offs in the first year and blame the previous guy and everything. And then things can look better after that. So this is down considerably from uh, its 52-week high. So it was as high as 43. Now it's at 33. Looks like a decent risk reward bet because the new CEO had like 20 something million in write offs this quarter. And what they're doing is rationalizing the inventory, making things more efficient. And although sales in the industry generally are on decline. In Stern Ruger and Smith and Wesson, they're up slightly. Nothing to write home about, but if sales are going down in the industry and yours are going up even 1 or 2%, that means that you are growing by taking money from your competitors, which means you have a better product and you'll be more likely to survive the downturn, in my opinion. So those are two that I own, either the common shares or by selling puts and buying options. And they're very small positions now, only because I'm currently not working. I accepted early retirement from the government, and so I'm a lot more conservative now. And along those lines of weapons and stuff like that, I'll talk about two defense stocks, but also this one. This is an interesting one. So I have the cumulative preferred shares of this, and sometimes you can find obscure things and do well at it. So I have accounts with three brokers, and only one of them lets me trade this. And so there's not a lot of people buying this, basically. And as you can see, these are cumulative preferreds and they pay almost 10%. And I was able to get some of this around 21 or 22. So if I can get it around 20, I got some lucky fills around 20. But um, sometime next year, this company has the right to say, I'm going to give you $25, which is the par value of this. And then you give me back the shares and you have to sell it back to me. You don't have a right to say no. So why would you get this? It's like, well, because they issued it at 25 and it's now at this price, instead of 8.75%, you're getting almost 9.5% while you wait. And if they call it back, you're going to get about another 10%, right? The difference between 23 and 25 is another 10%. So you're getting almost 20% if they call it next year. Well, why would they call it? So this company owns Gunbroker, which is the website that sells guns online, and they had a money-losing ammunition company. They sold the money-losing ammunition company, and now instead of no debt and 25 million in cash, they have no debt and about 50 million in cash. And if you put that 50 million in the bank and you're getting 4%, or you're paying 8.5% on these cumulative preferreds, you would say like, well, why am I lending at 4 and paying out at 8.75? Why don't I just call these back and then I can cancel that? That would be the smart thing to do, and they have the right to do that next year, which is what I think they'll do. No guarantees, but I think there's a pretty good chance of that. And so that's why I own some of this, and I buy it whenever it dips. But I don't want to overpay for this. So if I can get it below what the dividend is, so that it's about 10%, I like that. And this is the common stock of that same company. And as you can see, it's gotten beaten up. So there was a big proxy fight between two people on the board and the CEO. The CEO got fired. The CFO got fired. There were accounting irregularities. They didn't fill out their 10K on time. They were in danger of being delisted, but they sold off the money losing ammunition company. They fired the CEO, the CFO. There's a new CFO, and a few days ago they said that they received notice that the stock is not going to be delisted. So if you judge this as a company going forward, I think it looks better than as the company it was before. And I think it's got a really interesting moat because GunBroker is the largest online gun seller, and there's very heavily regulated, so you need licenses in all the states they operate. And because you're dealing with weapons, obviously, and it's a federal crime to do things incorrectly there. And the big retailers don't want any part of this. So Amazon, Walmart, eBay, none of them want any part of the gun business. So they sort of have this really interesting moat. It's not going to be the biggest grower or whatever, but I think it's worth more than the price here. So I think they made like I want to say 70 million from on a good year from the online gun business, and the ammunition business was a loser. But if you look at the whole company, it's trading for this much. But if you back out the debt, it's 100 million. And if on a good year, you can make in EBITDA something like 60 or 70 million, and then you get another good year as the gun industry recovers, if it recovers, and you're um, getting this at a pretty reasonable price, in my opinion. So that's why I own a little bit of this. I'm more keeping an eye on it, and I own a lot more of the preferred shares, which I think are kind of a lot less risky. And, if I'm getting a pretty close to sure 20%, I'd rather have that than, a possible double and a possible go nowhere or zero. So Kruger, Smith and Wesson, and Outdoor Holding Company, it used to be called Ammo Inc. I think those are okay if you're thinking about a gun theme or defense theme. And if we're going to expand that to defense, I had posted about or done a video on Taylor devices, and it was a double for me, actually more than a double. And I sold around 60, and then it retreated to the low 30s, and then I bought some more, and now it's at 44. I may sell a few shares, I don't know. So this is interesting because a lot of companies that do drones are always overpriced because drones are something that people are going crazy for, but the name Taylor Devices doesn't imply drones. So it's kind of drone adjacent, and you're getting it at a decent price for a defense company because it's 17 times earnings, but has a lot of cash and no debt. So if you go to the statistics, 145 million for the whole company, but if you back out the cash, you're only paying 110 million. So that PE looks like it's a PE of 17, 18, but if you back out the cash, you're probably paying more like 12, which is pretty good for a growing company. What I don't like about it, what I do like about it is they do make the landing gear for Predator drones. So if drones are big, this company is going to get big. Uh, there are some unknowns because smaller drones seem to be doing well in Ukraine, and they make the landing gear for the bigger drones. So I don't know how that's going to play out. And also, with the current administration trying to destroy the economy, I don't know how this will work out because they have different segments, and one of them is that defense segment where they make the landing gear for the Predator drones, but they also make something that look like giant shock absorbers for building, and they are very good in places like Japan or Chile that have a lot of earthquakes. They are like best in class uh, anti-earthquake devices, but with the economy being destroyed by the current administration and tariffs and things like that, it's questionable how much of this you'll be able to sell overseas, and that's about a third of their business. So yeah, that's a big question mark. I got it when it was oversold, and but you know, I don't want to sell based on the price movement, but I will wait until the next conference call, which should be in a few weeks, and then decide what to do with it. And along that line with defense and drones, again, if you look at anything with the word drone in the name, it's probably overpriced. And even if it's not making any money, it trades at an incredible price. This is one that I own quite a bit of, and it's up like 200% in the year that I bought it, but still interesting. So 40 times earnings is more than I'd usually like to pay, but it's a fast growing company and they have different segments. One is they make underground imaging and drones for things that you can use like in the undersea telecom or offshore drilling. And they also make batteries that are used in drones. And that's where the interest is because normally the sea drones are not really thought about much. Everybody's thinking about air drones, but with what's going on in China and with the success that Ukraine had with sea drones, this is a really interesting company because they make batteries for sea drones and normally the pressures under the sea are incredible, and so the way they deal with that is other companies encase their batteries in titanium so they don't get crushed. And this company has a unique tech where it's not patented, but it's they're better at making it than anyone else, and so they use this gel, which if you've ever done hydraulics on a car, jack up the car, fluid doesn't compress, and that's how hydraulics work. So if you encase the battery in liquid instead of a hard titanium case, you can fit more batteries, so these batteries last 20 or 30% longer than their competitors. And if you're dealing with, undersea drilling platforms and stuff like that, where time is money, the longer you can keep a sub down there, the more you make. And they have been supplying batteries to a company called Anduril, which is not a public company, but they have a contract, a large contract with the Pentagon to make hundreds of these sea drones. And if they continue to buy them from Kraken Robotics, this will be a home run. There's no guarantee that they will, but risk reward, I kind of like this one. So even though it's run up since I bought it, and even though I probably wouldn't buy it at 40 times earnings, I'm still going to hold on to it until I decide what to do. So, and this one I have, again, related to the gun space and it's up a little, but I'm still waiting for the next conference call to decide what to do with it. I'm up about 15% on this. So this is a company that makes like police simulations for practicing shooting. And unlike the other competitors, which have those weird goggles and then you just look like an idiot, this has the screens where the police have guns that, go back and forth and you're shooting at targets. And this one, you can have one screen, you can have 360, several screens all around, and you can do it with multiple people. They have different scenarios that, thousands of hours of video that they've shot with live actors, not, cartoons or anything like that. So it's very interesting because the company uh, had trouble meeting the orders that they sold last year because, they were very good at doing what they do with the product, but not so good at delivering. So there was, in some cases, a 9 month lag between when a police department would order this and when they would get the system. And then they got rid of the old CEO, brought in a new CEO, and he brought that down from 9 months to less than a week. And so he fixed that part of the business, and now he's working on the sales part because, according to him, he was not focused on making new sales because he didn't want the pipeline to get bigger if they couldn't fulfill the orders quickly. But now that they've got the order part fulfillment squared away, they're working on the other part, and they've managed to get approved as a contractor for the U.S. government. So maybe some agencies will buy this. I don't know. It's just in the early innings of that turnaround, and I feel like I'm willing to give it at least another quarter or two and see what happens. And the conference call, I believe, is August 11th, so I'm going to be listening to that and decide. I have a small position, and based on that, I can decide if I want to add more, if I want to sell, or just sit. But if you're thinking about a theme, those are some in like the defense and police and military that you can think about. And then also, I have a few shares of this, nothing to write home about, but this is one that I kind of can't make up my mind about either. This is called Optex, and it's a very small company, only 70 million, but the price isn't terrible, 16 times earnings. And what do they do? They make a optic that they use on the Bradley fighting vehicles and howitzers and stuff like that. So if military spending goes up, this will do well. And the owner owns a lot of the shares, the CEO, and they have no debt. So, it has some good things going for it. What I don't like is, it's kind of a one trick pony. So they make these optics for the Bradley fighting vehicle and the howitzers, which all of them need. So if you sell more of those and you sell more howitzers, then this company does well. But if you sell less, it's not like you can use these optics for other things like, put them in a Tesla or something like that. So yeah, I mean, I this is up like 60% in a year or 6 months since I bought it, but it's such a small position that it's not going to make a difference. And so I'm just sitting on it and see what happens. And with a lot of the positions I have, if it is a big position, it is not the one that I think is going to double in a year. If it's a big position like Google, it's the one where I think I can't lose money. And the small positions like this or like Kraken are the ones where I think I can make a lot of money, but I only have a small position. So if it doesn't go my way, I don't lose sleep over it. Anyway, so that's some thoughts on, just investing in a sector and a theme and stuff like that. What's going on with me? I haven't posted in a while, but I've been doing a lot of interviews. It's driving me crazy. I interviewed at 6 banks, 2 law firms, and 2 fintech, and don't have an offer yet. But the law firm I had interview number 7 on Friday, which is starting to feel like an SNL skit, but it is what it is. It's moving the ball forward. And I did get this crazy email yesterday, and the first thing I did is I laughed my ass off, and then I forwarded it to uh, 3 reporters that I know. And it is this. I got an email from ICE, and they want me to work for ICE. And this is offensive to me on so many levels because uh, when I retired from the government, I set up a special email to deal with OPM so that I wouldn't get it in my regular email and get lost or go to spam. So I have an email just for that. And this did not come from OPM. This came from ICE. So they gave my email without my permission to ICE, and ICE is telling me that they want to hire me because they are desperate. And yeah, if I want to work for them, they will give me a $50,000 signing bonus. And normally, if I would return to the federal government, I would have to give back the $25,000 separation payment, and I wouldn't be able to collect a federal salary and my pension at the same time. But they're offering to waive all that, so I get to keep the money. I get to keep my pension and collect a federal salary while I'm on a federal pension, which is unheard of. They're going to give me $50,000, and I get to start at a 14, which would be the highest salary you can get as a government attorney without being a supervisor. Um, and that's if I want to work for ICE being a fascist. Now, am I qualified to do this job? Absolutely not. I worked at a financial regulator. I was not a litigator. And the fact that you're going to offer me a 14, the highest level, and a $50,000 signing bonus and all these other perks to work for this agency is ridiculous because I know nothing about immigration law. I don't even know what the statute is called that they operate under. So, and I'm not a litigator. If I had to go to court for these Nazis, I literally wouldn't know which side of the court you sit on because I was a regulatory lawyer. Yeah, so not a litigator. I don't do immigration law, but they are so hard up for people that they are offering this. And there was a newspaper article a couple of days ago where judges in Texas are allowing these ICE attorneys to appear without giving their name, which is insane because in a court, you are doing things on the record and it's part of the public record. And as part of transparency, you need the lawyer's name in case they do something unethical. You can report them and get them disbarred, but the judge is allowing them to appear without even giving their name. And so they're resorting to all these desperate measures. Want no part of it. I'd rather keep interviewing and see what happens. And uh, the two law firms I interviewed at, it was difficult because I would not want to work at a law firm that has capitulated to the administration and given them money or settled with them. So I'm glad that the interview number 7 I had with this new firm, it's a big firm, but it's not one of the ones that settled with the Trump administration. So I'd be okay working for them. But anyway, that's what's going on now. That's my thoughts on this sector. And yeah, I may do some more videos. We'll see. But as I said, I've been a little busy and interviewing. And prior to that, I did some traveling, went to Europe, stuff like that. So I'm trying to enjoy my time off and live my life. But anyway, once again, these are just my thoughts, not a recommendation to buy or sell any of the stocks that I mentioned, just walking through my process. And if you have any questions, leave them below. And, I can't emphasize this enough. Do your own research. Um, I'm just discussing how I do my research. This is definitely not how you should do your research. You should invest in the companies that you know and understand and that you've done your research. And if you just want to blindly follow somebody else's picks, I would pick somebody like Warren Buffett. I wouldn't pick me. So that is what it is. Good luck, everyone.